I've talked about the triangle forming on the 60-minute chart. You'll see that in this video if you watch the video all the way through. I believe we're going to get a divergence right here on the awesome oscillators I've talked about. That's causing me to believe, again, we're still going to rally towards the upper boundary of the rising wedge, towards the upper boundary of the channel in the weekly time frame. I do believe we're in a topping process. My guess is it's not done yet. I've been calling for all-time highs. I still think that that is the case. I told you over here at the divergence, we'd either start a reversal or a correction. We got a correction and we only corrected sideways, forming a triangle. So I think it will be a continuation triangle to the upside. It could be a reversal triangle. I'll talk about that and show you that possibility. The bearish scenario, assuming that we've already peaked, and I've got, again, two different scenarios going on with the rising wedge I've been talking about. But I'm telling you exactly what I think. And again, either we're going to see this go negative and see a breakdown. My guess is we're going to rebound back up, form another divergence, as I've been talking about since this top. I've been telling you, again, we could form a multiple point divergence with that divergence that originally formed on the daily chart of the RSI and on the 60-minute chart RSI. We could form a multiple point divergence. I think we'll get it. NASDAQ's already doing that, getting a multiple point divergence, and we are getting a green bar today on the awesome oscillator. Been predicting that this was going to happen. It has now happened. NASDAQ's already moved up above the previous peak from earlier in the month. The S&P has not. So again, they could diverge if we start a reversal. My guess is we're forming a divergence right here in the most recent price action, as I've been saying, and that's what I've been talking about in every single video. I still think S&P is going to move to new all-time highs, but about both scenarios, after we got our peak from 2.5 weeks ago on the S&P 500, I've talked about RSI on the 60-minute chart, either forming a multiple point divergence or, again, a reversal. I think S&P is going to have an upward resolution to the triangle. I think we'll see green bars on the awesome oscillator for the S&P daily chart, and I think we'll get more green bars here on the NASDAQ in all likelihood, whether that's with the earnings, the PCE data, or the jobs report this week, whatever the catalyst or a combination of things. I think, again, still forming the top, but I think we're getting very close to it being completed. And again, we'll be watching divergences do complete. Do we get a post-election sell-off? Do we get, because we've already rallied going into the election. We've already rallied. Sometimes you get a sell-off before the election. Other times you get a rally in with it. Here we got it ahead of the election. So we could sell off with the election. We could sell off with the Fed or with further earnings. We're still in the heart of earnings season. This is what I think is happening. It's now playing out. I told you I thought it would happen. It is happening. Already had 3 sessions ago the bullish reversal of conditions here with momentum on NASDAQ. S&P is not there yet. I think it will be there. I think we'll get that this week in all likelihood. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate that. I have no sponsors, just a direct relationship with you. I just ask that you do what you can to help out, but I do need your help at this time. So please let me know you want this information by supporting the channel today. The VIX was bouncing today off of the 10-period moving average. Again, it's been going sideways, just like the S&P has been going sideways. We're still above the 50 here. The 50 is still above the 200 with the golden cross over here. Watching to see, do we start seeing the breakdown of the S&P triangle to the downside if we get a successful backtest? I don't think it's going to play out that way. I think we're going to get the diversion scenario, but I am open-minded to either scenario. I am looking for a topping process. Could happen if we start seeing a spike in volatility. My guess is we're not going to see that. Either the consolidation will continue here or we'll end up dropping below the 50 if we buy a little bit more time on the S&P 500. Do we firm up here at the center line and start seeing volatility return? If we do, then maybe you have that bearish scenario. We have the breakdown of the rising wedge and the back test now completed. Be watching. Volatility starts surging and these things start firming up here, or do they end up kind of rolling back down and we buy a little bit more time? Do we sell off with the PCE data tomorrow, or do we have the cool, tame report come in and the market rallies with it and we get an upward resolution of the triangle. We'll be watching. My guess is we'll see an upward resolution, but like I said, I'm looking for a top. It can play out either way. Angles can be continuation of reversal patterns. The angle I'm referring to is on the S&P 60-minute chart, which you will see in this video. You know, we got a lot of earnings this week, and we're paying attention because it is Magnificent Seven stocks and a lot of S&P earnings and tech earnings this week, next week, had some last week. We had AMD and Alphabet and Snap yesterday. The market digested those earnings, but then we had the GDP miss at the before the opening bell today. And after hours here, when the market's closed, which it just did, we'll have Microsoft, we'll have Meta, and we'll have Coinbase. And then tomorrow, after the close, we will get Amazon, Apple, and Intel. So we'll be watching. But right now, Microsoft, Meta, we'll be watching to see how that impacts the market. Then we had AMD. They were down 10.62% for the session, a drag on the tech sector there. And again, poor guidance going forward. Have Microsoft and Meta today in after hours. And again, it could be earnings that move the market up or down. And this was just now reported. Microsoft, right after the closing bell here just a couple minutes ago, we have Microsoft beating expectations, revenue growing at 16% faster than was expected. Microsoft beat on earnings and they beat on a revenue. The stock was slightly higher during the session, and in after hours, they're up just over 1% in after hours. Meta beat on earnings, but missed on user growth expectations. Even though the growth expectations were missed, the earnings still did beat, and the revenue also did beat. But by missing user growth expectations, the stock is down in after hours nearly 3.5% at the moment. There you have it. Before the market opened, we got two things. We got the private payrolls and the third quarter of GDP. The private payrolls came in double what was expected. And again, beating the previous reading, 159,000. Expected to come in at 113,000, came in at 233,000. Don't forget, later in the week, we'll get the jobs report. It's supposed to come in at 110,000. We got that rosy report. Previously, we'll be watching to see if it's revised down in the next few reports that we get. Not happen immediately. It may take a couple of reports to get revised down here. Likely will be. You know, I'm wondering about this number. The way the numbers have been coming out, you know, and the revisions and just, you know, the pretty much bogus numbers that we're getting with the job creation being overestimated and being revised down later. You got to wonder, again, they're very low expectations here, 110,000. Beat that, or again, we could eventually see this number come in negative. Probably won't happen until after the election, but is this... Are we going to blow past this number like we did with the private payrolls? And a lot of the job creation, a good chunk of it is with the government right now. So again, artificially propped up, the GDP being artificially propped up. The GDP missed. We got the GDP for the third quarter. It missed expectations. Let's see, where is it? GDP up here. GDP was supposed to come in at 3.1%. Which was supposed to be higher than the 3% previously, came in and missed expectations. That was part of the problem today. That and earnings, probably those AMD earnings weighing on the NASDAQ, came in at 2.8%. And again, this number, part of it is due to the GDP. Part of it is 0.9% due to government deficit spending. So again, borrowing from the future, artificially propping this up. Let me say this again. You know, people go, "Oh, this proves we're going to have a soft landing. We've got great GDP, at the low unemployment rate." got the job creation. This proves we're going to have soft landing. We have this great economy. People aren't that happy with the economy right now, and they go grocery shopping and look at the prices. But the problem is that, again, markets top on good news. Now, again, we're starting to see weakness, and we will eventually see weakness with the GDP going negative. Eventually, see the jobs on the job creation as we move closer to recession, or maybe into recession. We will see that as we're approaching that, or just moving into it. Markets top on good news. We are seeing weakness with manufacturing now down. The manufacturing has been contracting multiple months now. So we're starting to see some evidence there. We're starting to see some evidence with layoffs. Markets top on good news. They bottom on bad news. And so you have to understand that. That's why when people go, oh, this proves it, doesn't prove anything, because, again, markets top on good news. Now, tomorrow we are going to get the PCE inflation data. We'll be watching that. The PCE, the Fed's favorite gauge of inflation, is supposed to come in at 0.2% on a month-over-month. The core is supposed to come in at 0.3%. As far as, let me just move this up here. As far as we know from the estimates here, we have the estimates coming in for the year-over-year PCE. It's supposed to be 2.1%, supposed to be lower than the 2.2%, and the year-over-year for the core is supposed to be at 2.6. That's supposed to be lower than the 2.7. Could this be something that rallies the market along with earnings? We'll get more earnings tomorrow morning as well, not just Meta and Microsoft. Again, tomorrow after the bell, more Magnificent Seven stocks. Again, an important week. We got the GDP. Tomorrow we'll get the PCE inflation data, and then we'll get the jobs report at the end of the week. Next week we'll have the election, and then we'll have the Fed right after that. And it is looking like the Fed has moved the meeting from Wednesday, or the announcement from Wednesday to Thursday, probably because of the election. And that's going to be during the market session next week. We'll get the rate decision and Powell's press conference. And then the election is Tuesday, so we'll be watching to see what happens week with earnings, the economic data, and then on to into next week with the presidential election and the Fed announcement. Now, other things to be thinking about, the tensions in the Middle East. Will Iran respond or will they not? We just simply don't know. Something to pay attention to. Iranian officials are saying that they will give an appropriate response. What does that mean? Is that direct response, diplomatic protest? Are they going to respond by further arming their proxies in the region? So again, what does that mean? So are they going to respond? Are they not? We'll be watching. Again, geopolitical issues sometimes move markets, sometimes they don't. We got a relief rally this last time around as oil prices dropped. And again, oil prices dropping, by the way, and we're seeing a dramatic drop. They're dropping below key moving averages there in the weekly time frame. That is also suggesting recession, by the way, is coming. Weak oil prices. At the 10-year Treasury note yield here, again, it's dropping, but it came back down to the 10 period, and it bounced and pretty much closed just a little bit down, but well off the lows of the session. So again, I think the 10 year is going to turn off this level. We have the Fed meeting next week. We'll see what happens, but I do think that eventually the 10 year will drop, and so will the market. Go back and forth, with negative correlations, but right now, which we have right now, we've seen a negative correlation show up, but we had a positive correlation in that they've both been rising after the Fed began their rate cutting campaign there in September. Eventually, I think we'll see both of them drop again as we get closer and closer to a recession. Again, quickly, we have two scenarios. One is a trend line, a rising wedge trend line that has already been broken, and we're in backtest mode, about to break down further. we're going sideways. Really, we tried to get above the 10 period yesterday, and then we dropped back below it today. Both scenarios are marked here, the broken trend line and then the trend line of support. I talked about, again, the broken trend line. That again, that very well could just be a back test. If we start taking out the 20 period, we start doing technical damage. We have a triangle that gets a downward resolution. We can start going to the 50, the 100, or even the 200 period if we start getting a dramatic sell-off. Again, the scenario could play out if momentum continues with other indicators to weaken here. But if it recycles back up, we very well could form a triple divergence here or a divergence on the awesome oscillator, as I've talked about. The awesome oscillator starts going negative and we don't get a rebound back up. This scenario is still very, very much in play. That would mean that we've broken the trend line, we back tested, now we're forming a triangle, and it'll be a reversal triangle. Triangles can be reversal patterns or continuation patterns, so that would be the bearish scenario that we've already peaked right here and we're going to turn down. The bullish scenario is that we're forming a triangle and we are forming it above this trend line, including the shadow from the September low. And we're forming this triangle and we're going to have an upward resolution, maybe with earnings or the PCE data or the jobs report on Friday, that will get a pop above this level, that maybe to this trend line right here from the July peak and these peaks right here we recently made here. That formed the divergence on the RSI, or get above the red trend line and move towards the upper boundary of the rising wedge. So it's just some important trend lines I'm looking at. I've talked about these trend lines. My guess is we're going to have an upward resolution and probably move to one of these trend lines and then begin to turn. I think that will make a triple divergence on the RSI. I think the MACD will probably try to recycle back up. Again, we start breaking down, losing the 20, breaking this trend line. That would be a sign of weakness. We broke the other trend line, but we never got confirmation and a follow through. We've gone sideways. So we're consolidating, just like the triangle I talked about over here. So again, regardless, again, I'm looking for a topping process. Now that the NASDAQ has filled the gap at 20,400 a couple weeks ago, two has been in a kind of a sideways trading range. So again, we're looking to see if we complete a topping process. My guess is we're probably going to get an upward resolution here and stall at one of these trend lines and then begin to turn. But again, I talked to you about the peak over here, and I told you, again, the divergence here and the divergence that's set up on the 60-minute chart, that was either going to give us a correction or the start of a reversal. We needed to see NASDAQ fill the gap. It did at that time, but we have now corrected. We've had a little bit of a pullback, correcting sideways. Sideways. Do you see the triangle? We corrected sideways. We did not correct sharply lower or start a reversal. We corrected sideways, just like we corrected sideways over here. Opens the door for a continuation pattern unless we see further evidence of a decline and further weakness. And as I've said yesterday, talking about the triangle, I think we're going to end up getting an upward resolution. My target has been 5750 to 6,000. The trend lines, they're in the monthly time frame. And if we go up here, again, we can go up towards the upper end of that target. We're in the high 5,800 area here. We can exceed it and move to that upper end of the target, closer towards 6,000 if we try to move towards one of these trend lines. If we do move towards those trend lines that I just talked about in the daily time frame, you have a trend line right here in the weekly time frame that, again, we could be completing a topping process up in here at the upper end of the boundary of the channel. We're seeing the divergences begin to play out, and again, they begin to play out, it will likely be a very sharp, quick move down. We will see these divergences play out and produce, in all likelihood, a reversal. We're at major resistance in the monthly time frame, again, between 5,750 and 6,000 there. My guess is we're going to go a little higher and maybe go closer to this trend line again, maybe just a little bit above. But again, like I said, we start seeing weakness and get more evidence, and maybe that's all she wrote. My guess, though, is that will have an upward resolution. I think we'll see those negative divergences develop on the awesome oscillator in the daily time frames. Now, I just want to say, look, we have this triangle that's developing. I think we're going to get an upward resolution. I've been telling you over and over, I think that the awesome oscillator is going to form negative divergence on the S&P 500, and I think we'll form a divergence, and I think we'll see an upward resolution. I told you over here, we're either going to get a reversal and start to sell off in October, or we're going to get a correction and form a multiple point divergence. We corrected sideways in October. After peaking in mid-October, we've corrected sideways. I think we will see an upward resolution of the triangle, and I think you'll either get a brand new divergence here or build upon this one over here and end up forming multiple points of divergence. I've talked about this way back over here when this was forming. And I just want to say this, look, again, I try to present to you both the bullish and the bearish case. I told you, okay, we can get a reversal here, but we've got to see the signals turn bearish. That didn't happen. I try to tell you right here, okay, we can get this multiple point divergence forming, okay? But unfortunately, some people, they only cherry pick what they want to hear. I've been calling for a topping process. Keep saying, hey, we're going to move to new all-time highs. And a lot of people, they cherry pick what they want to hear. They don't hear, hey, we're going to move to new all-time highs. They just hear, oh, it's a topping process. And then so people, it doesn't fit with their presuppositional bias that, oh, the market's going to top and, this bear market immediately. That doesn't fit with their scenario. So again, they end up throwing in the towel. It happens at every top. The bears, they end up throwing in the towel, and because the market takes its time doing what it's doing, and then the bulls are just oblivious to the top, and again, they don't believe the market could possibly go down, especially in this day and age with the Fed, the plunge protection team and all the rest of it, But look, I've made some pretty bold calls. I've made pretty amazing calls. I've not been perfect, but the calls have been pretty stinking good. When we saw NASDAQ peak, I told you NASDAQ peaked on the 11th after it peaked on the 10th, and I told you S&P was going to peak right after that. It peaked on the 16th, the very next day after the gap. I told you the peak is in, and we're going to sell off. I told you we're going to eventually go back and fill the gap on NASDAQ. We had gap down hard, and again, I told you eventually, while I was predicting a sell-off, we would eventually go back and fill that gap, and again, I've been calling for the NASDAQ to fill the gap now for months, and it's now happened. It happened just over 2 weeks ago, about 2.5 weeks ago. And again, I believe it's in a topping process now. But called that top and the sell-off correctly. Over here, again, called the sell-off correctly. I thought we got that divergence. I thought we were going to get one more push down, and we did not get it. We rallied up, we got a high, we pulled back, and we got a rebound back up, and we got a higher low, higher high, and my signals turned back to bullish. With that higher low, higher high, my signals began to turn back to bullish. Ones that didn't, right after we had the gap higher, the rest of them did. So all of my signals turned back to bullish with this move and the gap higher there. Now, again, I was calling for a push down. With the higher low, higher high, my signals turned back to bullish here. So we didn't get the next leg down that I was looking for, but my signals did turn back to bullish. Not perfect, but they did a good job. Like the bullish saying the bottom was in. We rallied up. We formed this divergence. I told you we had another top right here. Called that correctly. And I told you, again, that's not the top. We're going to go make new all-time highs. We sold off as I predicted. We got the jobs report, and I told you we're bottoming with the jobs report, or we're going to bottom the following Monday, or rally with the inflation data. We did that. We got the bottom, and again, called that bottom correctly. We rallied back up. I talked about this divergence. We broke out. This was surrounding the Fed breakout. We broke out after the Fed. We got a post-Fed rally. What was I calling for? A post-Fed rally. We rallied up. We got the divergence. I told you again that we were probably going to back test. We ended up back testing. We formed this triangle. I told you the triangle is going to get an upward resolution. It's at key support. I told you we're still going to make new highs because why? NASDAQ hadn't filled the gap at 20,400. I believed that was going to be the case. So I correctly called that peak, correctly called the triangle, and I told you we had another bottom right here. And again, that we would get an upward resolution to move to new highs, to have the NASDAQ fill the gap. at 20,400. That happened. That was correct. And then we saw the NASDAQ in mid-October fill the gap, and we formed this negative divergence right after that on the S&P 500. And again, like I said, I told you we're either going to get a reversal and see a major sell-off, or we're going to correct. And again, we still have this rising wedge pattern. I've talked about the trend lines with the lower boundary, and I told you what I'm looking for. But again, signals I've given have not been perfect, but they've been very close, right? Most of the time here, again, called the top, called the sell-off here. Was looking for our leg down. We did not get it, but called the reversal here and here. Signals turned back to bullish with the gap and with the pushback above the 50. Called the top here correctly. Called the bottom here correctly. Called the rally correctly with the inflation data. Called the peak here correctly with the breakout, the post-Fed rally. Called the triangle correctly and the breakout of the triangle correctly. And then here told you again, we either get a reversal or we get that multiple point divergence, one or the other. I think we're going to get the multiple point divergence because I think the awesome oscillator is going to form a divergence. I think we'll rally into the election or the Fed, but I think we're going to complete this here going forward. In all likelihood, I have the guts to tell you what I think. Again, I've not been perfect, but I've been pretty close with the turns. And again, I've talked about all-time highs and NASDAQ hitting that 20,000. Now I'm looking for the 20,400 area. Now I'm looking for the topping process. And again, I'm looking for a topping process. People don't want to hear, some people that are looking for a top, they don't want to hear new all-time highs. And again, if these triangles and so forth, the consolidations, it drags out for some people that have a presuppositional bias. Again, when I've been calling for all-time highs, some people kick and scream and no, we're gonna go down now. And again, I'm telling you what I think, okay? And again, bulls may like me saying, oh, we're gonna move to new all-time highs, but they don't like me saying we're gonna top. So again, it's lonely at the top. And I mean that at the topping process is what I mean. It is lonely at the top because, again, call for new all-time highs. You call for the topping process to complete. The bears have, they don't have patience to wait for that. At least perma bears don't. And so, they don't want to hear any of the bullish stuff I'm saying. And then the bears, they don't, or the bulls, I should say, the bulls, they don't want to hear any of the bearish stuff. That we're going to top and eventually usher in a bear market. No, it can't happen, yada, yada, yada. So again, it is lonely at the top. Up here at the topping process, all by my lonesome. I'm sure some of you hear what I'm saying about both the bullish and bearish cases, but unfortunately, people tend to be on one side or the other because they have a presuppositional bias. And, you say anything bullish to the bears, they don't want to hear it. And again, that's why they've regarded me continuing to say all-time highs and calling these turns of the bullish moves and the continuation patterns. And then you got the bulls. They may like that part, but they don't want to hear the other part about a topping process. And we're slamming up into major trend lines in the monthly time frame. So again, it is lonely at the top. Just wanted to review that. I've tried to do the best I can to tell you when the turns are happening and what I think with the continuation patterns and the bottoms and the tops. And again, other than not getting the August bottom completely correct there and missing the lows, but getting it as the higher low, higher high setup, other than that, it's been pretty good. Signals that I've followed have been pretty good. And again, my signals start turning back to bearish. I think we get an upward resolution, but I think we will complete the rising wedge very, very soon. And I'm looking at these different trend lines as I've talked about. I'm telling you this because, again, I have the guts to tell you what I think. Most people that do what I do call moves after they've already happened. They don't say, hey, I think we have the top here, or I think that we have, and I could be wrong. I told you NASDAQ, again, I think it topped on July 10th. We're very close to those highs. I could be wrong. We can go higher and hit the trend line again. I tell you what I think. Again, I think we're going to get an upward resolution, and I think that's going to complete the divergences on the awesome oscillator. I talked about the NASDAQ. The NASDAQ, again, could be in backtest mode as well. The NASDAQ was down today, 163 points, 0.79%. Again, could we be in backtest mode? Possibly. Again, that would be the bearish scenario where you start taking out the moving averages and you come back and you start taking out this trend line right here. I've got, again, the smaller triangle that we're back testing, the larger or triangle, rising wedge, pardon me, and the larger rising wedge. Do we get a divergence right here that is now completing and that's it? Or do we go up a little bit more and again, possibly move above the July high or just into the upper boundary here and tag that level? We'll be watching. But again, I've called for the gap to fill, and it has. And again, same thing here. I told you I was looking for an ABC move. And again, if I'm wrong, we go above this peak right here. But I was looking for this gap to fill. We got it here about 2.5 weeks ago or so. We've come up and we've gone higher. Will the S&P do that? Possibly. I think it will. And again, I think that we're forming this rising wedge. Maybe we just kind of see this form with a lower high. Maybe we go higher. This pattern has a good shot at playing out. And I'm looking at these trend lines, excluding the shadow here, including the shadow, and we're completing a topping process. We do have a triple divergence, or I should say a divergence already between this peak here and this peak here. This was actually a lower high. So again, NASDAQ had gotten a lower high, S&P had gotten a higher high back over here. Now NASDAQ's higher, S&P is not. We'll be watching to see if the S&P can make a new high. But same thing here. I'm looking for a divergence to develop here in the most recent price action on the MACD. Again, the previous peaks gave us a pullback to the 20-period moving average. So again, still rising wedge here. I still think it's going to play out. I think we're in a topping process. And again, I think we formed those divergences on the Awesome Oscillator. We got that green bar today on the Awesome Oscillator on the NASDAQ daily chart. We get a bearish inside day. We had a bullish inside day over here. We got a bearish Harami pattern here. We'll see what becomes of that. We're bouncing off the 10-period moving average. Again, candle patterns mean nothing unless they're confirmed and get a follow through. We did get that here with confirmation with our bullish inside day here. Now we have a bearish inside day. We'll see what becomes of that. Now again, MACD is rolling over like on the S&P. Again, do we still make it up to this level with the PCE data or with earnings or with the jobs report? Or again, is that all she wrote and we start seeing evidence of a breakdown? We'll be watching. But again, I believe we're in a topping process here. And again, as I've said, it may not be done. My guess is it's probably not done.